If we switch over to our spot markets here, we will see that we basically sold off 100% perfectly down. It was to the 0.5 Fibonacci level. We'll look at that on our next chart. But more importantly, we are holding on to and barely doing so the 200 simple moving average. So here we basically closed today's candle at the 200 simple. It is holding up price action for now, but now we see what's already taking place as the 8 and 21 are getting ready to cross to the downside. It's all but inevitable at this point in time. Not unrealistic at all to think that we get a pushback up to 48,100 to retest this area and attempt to stop this cross from happening. Very common to see that take place, but I do expect it to get rejected. It would not be unrealistic to think we come down here and retest support at the 200 exponential moving average at 41,287. But the most important thing that I'm paying attention to now, aside from all the divergence, aside from calling the exact top, aside from, seeing this happening ahead of time and not needing any fundamental or bullshit reason why it happened, the most important thing we're paying attention to now is we are at the 200 simple moving average, and we see the slope is flipping back over purple right here. That means we are losing the slope line. So while we're still above the 200 exponential and we still have that slope to the upside, what are we paying attention to? Well, what do markets look like when they top out? The 200 exponential is in a powerful trend to the upside, and then eventually, because of the lag, the 200 simple overtakes the 200 exponential. We try to maintain support above the 200 simple, fall down to the 200 exponential, and then the market rolls over and we go into a bear market. Why do I say that so convincingly? Well, it happens on a regular basis. We see here on the 2019 April rally where we ran up to $14,000 that we basically had the exact same situation happen. 200 exponential moves to the upside, 200 simple overtakes that. We attempt to rally, get above it, and then eventually have our CVD dump back down to 3,800, absolutely crushed. And then once again, we see looking at the 2017 top right here, exponential is above the 200 simple the whole way up. The 200 simple crosses above the 200 exponential, acts as resistance, and then after that we sell off back down to $3,000. And again, we see that exact same signature taking place. And then if we just keep strolling back to our last 4-year cycle before that, we will see in our 2013 bull run, we go absolutely parabolic. 200 exponential is above the 200 simple. They cross 200 simple lags and cross above, acts as resistance. We maintain above it for a short period of time before eventually coming back down to 200 exponential. They cross to the downside, and then once again, we go into a multi-year bear market. So it literally happens over and over again in every asset class, in every market, all over the world. It's not a 100%, but as we can see in Bitcoin's experience on a daily time frame, literally every time this signature has showed up, it has resulted in a 1-year bear market with a roughly 70 to 90% sell-off. So what am I expecting to happen right here? Well, I'm expecting the same thing that's happened every other time in history in the last 12 years of Bitcoin's life to happen once again on the daily time frame. Is it 100%? No, but I like my odds. So looking here at our, you know what, we can look at one more thing before we look at the Fibonacci levels. I'm going to go over to our weekly time frame, and we will notice that when we sold off here aggressively on that bounce down, we closed slightly above the 8 moving average on the weekly, or we're at above the 8 moving average, but our wick came down almost perfectly to the 21-week moving average. We'll notice also that, as expected, once the slope line on the TJD TDMACD flipped over blue and we're underneath it, that we expect to get a rejection. And obviously that is taking place now as we speak. And we are losing momentum. And basically everything we discussed is literally playing out to a T. So, and then obviously here on our Fibonacci, we have a Fibonacci drawn from the top at 64,000 to the bottom down here at roughly 28,000, and we will notice that we moved to the upside, found some support at the 618, attempted to get to the 786 and failed, and when we sold off, we immediately came down and touched perfectly the 0.5 Fibonacci level. We then bounced back up and found resistance at the 618 Fibonacci level. So what are the two potential situations just looking at Fibonacci, not looking at momentum, not having any bias or anything like that? Well, I would say one of two things going to happen. We're here at the 618. So if we get back above the 618, we're going to attempt to try to get back up here to 54,000 400 roughly to tag the 786, the next fib target to the upside. If we continue to see resistance at the 618 and these previous 2 points of support right here, I would expect it to act as resistance, and then we sell back off and just bleed out. Bitcoin's throat is slit, and we just continue to push back down to the 0.5. At which point in time, obviously, based on what we see happen, we would expect a stair step in the respective direction. If we take out the 786, maybe we see a little pullback or find support on it and then continue up to the 886 at 58,800. But that does seem much less probable at this time, as more likely than not, I think we would head back down and retest the downside target of 39,000. At which point in time, I will be looking at the price action and how it reacts. And I'll be looking at that area down here as a buying area, as that would essentially look to me like a low and then a higher low, which would tell us that there is potential for continuation to the upside. But again, that would be a scalp swing trade or potential positional trade. I would not be going long into Bitcoin to hodl, as many people talk about. I'm buying the dip. I'm a hodler. I'm so glad Bitcoin pulled back because now it can go to 70,000. Yeah, okay. I'm sure that's what you wanted. So here we saw the quadruple bearish divergence on the Stoch slope play out absolutely beautifully. We have a single top, we have a second lower high, we have a third lower high, and then here we have a fourth lower high. And if we look at the correspondence on price action, we will see we had a high, we had a higher high, we have another higher high, and then finally a fourth higher high. We have 4 drives of bearish divergence taking place, at which point in time we absolutely dumped. And then obviously we can pay attention here on the TJD Fisher. We discussed this exact situation playing out as well. Absolutely beautiful. We had once again a high, a series of lower highs, and then we had a third lower high here, but we took out that lower high. A lot of times this will tell people, no, the divergence has been invalidated. We're continuing to the upside. But I specifically said that this to me was more of a consolidation on price action and less of a peak, that I wanted to see it take out this high right here, which it obviously failed to do, and then immediately sold off aggressively. And just in case you didn't see when it was taking place and what was happening, it was a roughly 20% sell-off, which is just enough to liquidate anyone that's using 5x leverage or more. And a lot of the altcoins saw between a 30 and 40+% sell-off as well. Some like Solana have completely regained those losses. And then if we look here at the waddah explosion, we will see exactly what I said happened. We have the blue slope line here during our first peak in volume. We have a blue slope line here during our second peak in volume. We have the blue slope line here during our third peak in volume. And then we attempted a fourth slope to the upside, which was obviously completely destroyed by our selling off right here. But, you know, we'll see that whenever the blue is down here, it means that whatever trend is taking place is picking up in that direction. It's becoming more aggressive. It's becoming more powerful. We're seeing more volume and strength come in as the slope line turns blue. And when it turns yellow, it is losing strength or getting ready to roll back over in the opposite direction. So if it's green in the background and the slope line is blue, it means we're in a powerful trend to the upside. If we see it turn yellow, it means we're still in a trend to the upside, but we're losing strength, we're diverging, we're selling off, we're weakening. And then again, we see it gaining strength, and then vice versa when it's red. Here, when we see the red and orange in the background here with the blue slope line, it means we're in a powerful, powerful downtrend, and it's getting more violent, more aggressive, selling off faster. And then when it turns yellow here, it means it's losing strength to the downside or starting to bottom out, and then we could potentially expect a trend temporarily flip back over or potentially a bottoming action. So now here we'll see on the daily, we have a very powerful trend starting to beginning. We see now exactly what we discussed as well with divergence in the volume. We had a higher volume here, lower volume, and then lower volume here. And now the volume has broken out, and it has broken out negative. So what is that? It's once again a divergence in our price action compared to our volume. Here we have price slowly melting up, and here we have less and less volume happening. So what's happening here? Well, people aren't selling, and then other people are FOMOing in, but less and less people are FOMOing in. And what do we call that? We call it a sucker's rally. So, you know, obviously the hodlers that were buying and buying on the way up and getting more and more leverage on the way up end up just holding bags because now they're underwater in their positions. So now we have an extreme amount of pressure from the upside here. So we always talk about this basically, like where the pressure is at, where the selling pressure is at, and the likelihood of seeing continuation. And now we will see actually that what we have taking place is we have all this pressure above our heads. So anytime we try to get above this area here, people are going to sell into it because they were trapped in this positions right here. So all the volume that took place during this distribution period, during our initial head and shoulders at the top right here, and then now all this pressure for people that FOMO'd or bought in at the top of this trend here, saying this is it, we're going to break out, we're going higher, we're going to 70,000, we're going to 100,000, we're going to 150,000, $250,000, $1 billion, yay! Well, now they're all trying to just get out of their positions even, or whoever else is dumping on their head, and they're going to be stuck holding bags for potentially a 1 year minimum downtrend if we do in fact end the cycle here. Most importantly though, what we're paying attention to is we now have an initial high on price action on the macro, and then we have a lower high here at a what amounts to a key Fibonacci level. This is typically what we see when markets top out. So we need to be very careful here. Obviously, we were expecting this to happen, but I understand that not everyone uses technical analysis. Not everyone uses their brain. So a lot of people are upside down, stuck, caught in this position, and don't know what to do now. What do I recommend? Well, I recommend using technical analysis and learning, not FOMOing into trades. Obviously, not financial advice. But, you know, if you learn ahead of time, it's going to get you a lot farther when it comes to like trading, investing, etc. than you know, just crawling down on your knees and hoping and praying and begging that, you know, you don't lose all your money because you need to move out of your mom's basement. But, you know, obviously this corresponds not only with our Labor Day, coincidentally, holiday weekend, and obviously traditional markets being closed while everyone wants to gamble, and obviously our 24 markets as well, 24-hour markets as well. But on top of that, this is very important as also all of the federal programs of welfare, or not welfare, socialism, whatever you want to call it, have ended. So there's no more pandemic unemployment aid. There's no more extended unemployment aid. There's no more, you know, mortgage or rental forbearance. You have to actually pay your bills. You have to actually take your ass to work and make some money. So I expect this to cause a ton of pressure on all types of markets, as now all the little AMC apes and all the little like silverbacks and all the little crypto bandits need to like take that money and go try to like rent a place or buy a place or find somewhere to live, because owning a bunch of Bitcoin but living in a tent on the side of the road is probably not an ideal situation for most people. But I'm sure many people are probably going to end up in that situation. So looking at our next Bitcoin chart, we have obviously exactly what we discussed has played out perfectly as discussed. If you did not see the previous stream from Sunday or the short little clip in the most recent video, go ahead and check that out. But we'll see here that we had 3 drives of bearish divergence on our MACD, stochastic, and RSI, resulted in the exact top, which is where we sold perfectly, beautifully, amazingly. And then when we sold off and came back up and put in a lower high, we closed the majority or the rest of our positions as well, almost perfectly again. And then again, we sold off and saw 3 drives of bullish divergence taking place at the bottoming pattern, at which point in time we entered back into a position at 30,600 and rode that back up to the top. And then once again, we saw 3 or arguably 4 drives of bearish divergence taking place here. Why do I say arguably 4 drives? Well, basically just because depending on how you look at that little, oh, which one do I want? I think I want this one. Can just put another one right here. So depending on if you look at this as 1, that 2, this is 3, and that's 4, or you don't count this because it's more of like a consolidation rolling over to a new high, you count that as 1, 2, 3. But again, depending on what indicator oscillators we look at on the MACD, we have 1 drive, 2 drives, 3 drives, and then a 4th mini drive down here. 4 drives of bearish divergence. We have a channel that we were riding up, and then we broke down from the bottom of the channel, closed outside the channel, and then the measured move of the channel, as predicted, would take us down to 36,928. Does that mean we have to get there? Nope. It's very possible that this channel breakdown could underperform if the market stays bullish. It's also possible this was in fact a much larger pattern, and depending on how you want to argue it and the probability, you could argue that this is actually just the, depending on which low you want to go by, we'll go by the close here, that this was in fact an A, B, C correction. And what we expect to happen now is actually a lower high a lower low to take place. So we have to wait and see what happens. Obviously, this is still playing out, but arguably, if you were going to say this is a structure to the upside, this is a depending on what you're looking at it as, a 5-wave structure or the 5th wave of a macro 5-wave structure, depending on how you're looking at this. Basically now saying that we have topped out and we're now going to go into an A low, a B lower high, and then a C lower low correction. And then where is that going to take us to? Well, depending if you look at, if you just put up basically a basic Fibonacci and you go back to either of these two lows, either the 3,800 low or our 3,000 low back here. Let's just look at the macro and we'll go by the 3,000 low here. Well, when we sold off from the top, we sold off perfectly to the 236, confirming that now the Fibonacci targets were valid and that we had potentially topped out the market. And then the next confirmation we're looking for is an attempted move back to the upside based on the bullish divergence which took place. We then have 3 drives or 4 of bearish divergence, resulting in a lower high from our peak. And now what do we expect to happen? A breakdown from that point to our next substantial Fibonacci level, which would take us down to our 382, which would give us a roughly target of 20,495. And obviously that would line up almost perfectly with our previous all-time high from the 2017-2018 market cycle top. So obviously if that area holds, then after that, maybe we bottom out and continue to the upside. It's also possible this results in a 5-wave, sell off to the downside, where we have basically like the A, B, C, and then we have a D move back up to retest our support as resistance, and then we basically have an E or a 5th wave to the downside, maybe taking us down to our 0.5 or 618 level, etc. So it's also important that we pay attention to this as well and go from our 3,800 low to our high right here, and we'll notice obviously let's turn this one green. We'll notice obviously that we have slightly different levels because it's going from a slightly lower level. So we need to make sure that we pay attention to potential like undercutting of these targets, because we're actually going off of, essentially what it comes down to is the bots and algorithms could be taking either of these swings as a key level and then going off of them. I would expect that there's going to be some bots or algos in play that are taking the 3,800 swing and some are taking the 3,000 swing. So I would expect substantial amounts of movement based on either or of those. The truth is, whichever one is the actual market maker, whichever one has larger volume traded behind it, is eventually going to dominate. I would expect that one to be this bottom right here. But it is possible, obviously, that some algos or bots or market makers are going to be going from this swing. So that's why I like to keep both of those in mind. So that's what we're paying attention to. Obviously, we need to be very careful though, because if this situation starts to play out and we start to sell off, that takes us back to our macro move, the one that really makes everyone butthurt and really makes everyone sad and scared and want to cry. And that is looking back at actually we got to look at our other chart for this one. That was on Coinbase. If we go over to our Bitstamp chart and we just look at the monthly on this, this is obviously a chart that we have talked about quite a few times here. And what we're paying attention to is when we have this initial move to the upside back from our 2010, 2012 bull run to the top at 1,128. And then we have our sell off down here to 155. Then we have our second run up here for the 2017 peak at 20,000. And then we have our sell off into the bear market. And then we have our potential peak up here and top at 64,000, and then potential entry into the bear market. So what are we paying attention to here, and what are we looking at on the monthly? Well, just a quick refresher. From this initial move up here when we sold off, if you take into account our sell off basically from the top here to the bottom here, we came up slightly short of the 618 in red here, and then we sold off to roughly the 2 to 1, the 200% move to the downside after the initial move back to the upside. So we're at slightly below the 618 and then 2 times the initial move down. And then here on the second one, we have from the top to the bottom, the initial move back up slightly below the 618. And then from that bottom to the top right here, up to the 618 roughly, we have a just below or just shy of 2% or 200% move to the downside. And then once again, if we pay attention here where we topped out, we came down to the bottom, we came up just above the 618, but could not maintain or close a monthly above the 618. So again, saying that was our potential top right here. Obviously a little too early to tell, but if we do the exact same thing once again, assuming that the same thing that's been happening every other bear cycle or a bull market of 4-year crypto halving cycle has taken place, and that we have in fact topped out on our lower high top right here, that would tell us that we're potentially looking at, we came up slightly higher than the 618, but if we measure from the bottom here to the top here, and then we expect a roughly 2% or 200% move to the downside. Let me turn that back on here. We would expect, based on the same thing that has happened every other time, every other bull cycle, every other market cycle, every other halving event, that we would expect essentially a bottom somewhere around the 2.0, as that was exactly what happened last time. So here we have just above or just below the 2.0, a little more than a 200% move. Here we have just above the 2.0 or a little less than a 200% move, and then here we have at the 2.0 to slightly above it, and that would give us roughly a bottom of 15,545. Am I saying that we have to go to 15,545? Nope, not at all. But I'm saying based on exactly what has happened the previous 4-year cycle, the last 2 times it happens, which is every time that we have to look at, that's what's going to happen based on the 2 previous points that we have. So we obviously don't have a point yet for a third point, so we don't know if that's going to happen, but obviously based on this, there's a high likelihood. Also, what we need to pay attention to is, now, did this potentially just top out a 5-wave cycle? Obviously, depending on if you use Elliott wave or Fibonacci, which I clearly do, we can look at this as our first completed 5-wave macro cycle taking place. Well, what does that mean? It means that this was our top for the 1. We came back to 2 is the retracement of the first wave. And if we look at that on a Fibonacci scale here, and I'm just going to switch this one over to green. We look at the sell-off right here, and we came down slightly below the 236, but above the 382. Okay, so between the 236 and the 382. So then if we say from the low right here to our wave 3, which is another wave to the upside, followed by a 4th wave retracement sell-off. So that is a retracement of only the 3rd wave move from the bottom of this cycle to the top of that cycle, and we came down perfectly to the 382. So here we have just below the 236, in between that and the 382. Here we have exactly to the 382, and then finally, assuming this was our 5th wave cycle playing out here, what do we expect the initial move to be? Well, from the bottom of our wave 4 to the top of the wave 5, or end of the cycle here, potentially. And then we would expect a sell-off back down to at least the 236 or potentially the 382. So somewhere around roughly $20,000. But the problem here is that when you complete a 5-wave Elliott wave structure, what happens is you have an initial sell-off down to that similar level, which is the Fibonacci of wave 5, but then you have a macro sell-off continuation where you retrace the entire 5-wave structure. So if you retrace the entire 5-wave structure, you're going to go from the low back here in 2011 to the high right here in 2021. And then obviously this is where all the crybabies unsubscribe to my channel. You basically would sell off somewhere a retracement of the 5-wave structure. So if we go all the way up to 64,000, now the initial sell-off would take us down to our first target, which would be the 236. The 236 is going to be at $5,782 Bitcoin. Do we have to go down that low? Do I have to be right? No. But statistically, I'm right pretty fucking often, so it might be worth considering. So is it possible that Bitcoin goes after this into a long-term bear cycle that changes everything, and we no longer look at this as just this clockwork pattern of 4 years, bull market, run up, retrace, bull market, run up, retrace, bull market, run up, retrace, and we go into a longer cycle that corresponds to the entire 5-wave structure up, the entire 12-year cycle to the upside, and now we start hitting these targets to the downside, is very possible. So the initial target for the 236, the minimum Fibonacci retracement for the entire 5-wave structure on the macro would be $5,783 Bitcoin. But that's not possible. Bitcoin will never go back to $5,783 because of nothing. Because there's no earnings, there's no sales, There's no way that you can actually value Bitcoin other than what someone else is willing to pay for it. So for someone to say it cannot ever go down to $5,783, I have a legitimate technical analysis argument as to why it can. As a matter of fact, if we look at the 382 target, that's actually $1,268. So is it possible Bitcoin goes back to $1,268? Yes, it 100% certainly is possible, because there's no earnings. Bitcoin does not own any assets. The only thing that Bitcoin has is buyers and a network effect. So you can argue stock to flow ratio, you can argue whatever you want, but the actual possibility that Bitcoin goes down to $1,200 or $6,000 is a legitimate possibility based on technical analysis. So it's very important that people keep that in mind. Am I saying you should just sell all your Bitcoin now because it's going to $1,000? No, not at all. Not at all. Would I ever tell you what to do? No, because it's not technical analysis. I'm sorry, it's not financial advice. I'm not your financial advisor. I'm just saying there's a legitimate possibility and technical argument that that would take place based on Fibonacci levels and, of course, Elliott wave structure. So there we have our Bitcoin technical analysis for today. There we have our obvious targets to the downside based on what we've been looking at here. And once again, obviously, technical analysis has trumped all the moon boys. It has trumped all the FOMO, and it has crushed the crypto circle jerk once again. So we need to be very careful, as exactly what I said happened with Ethereum. We were unable to close above 4,000, put in once again a lower high. So while Bitcoin was looking overall fairly bullish, but starting to put in some warning signs, Ethereum was looking much more bullish on longer time frames from the daily, weekly, and monthly actually. But the most important thing was we needed to see a close above $4,000, which we did not. Instead, Ethereum just massively sold back off to $3,000, lost 33% of its value in a single daily candle. While it does look more bullish than Bitcoin now, as it is still well above the 200 exponential and simple moving average, it was unable to maintain price action support above the 21 moving average. So while we entered back into a Ethereum position roughly around $2,000, slightly lower because we entered off of the 4-hour candle, it was, I think, closer to like, it doesn't even matter. But anyway, it has over doubled in that meantime based on that cross alone. So obviously, if you got out of Ethereum at $3,300 and back in down here at $2,000, the same idea being that when this crosses back to the downside, the 8 and 21, that once again, you want to no longer be bullish on this on a daily time frame based on our 8 and 21 shorter moving averages. That's going to tell us that potential target for Ethereum to the downside would be somewhere back around $2,500. So we also see now playing out a very clear top right here and then a lower high right here, which is some very clear bearish divergence taking place. So Ethereum still looks stronger than Bitcoin, but overall does not look good. And then obviously our Ethereum to Bitcoin chart, we had our descending triangle right here, broke out to the upside, found support at the top resistance of the triangle, came all the way up and started to form our channel right here. And then obviously our target, once we topped out back here, was back down to the bottom of the channel and roughly a 0.07 Ethereum to Bitcoin ratio, at which point in time we actually overshot our target to the downside based on that wick. But if you take out like the little stop run, if you take out the little exchanges shutting down to stop their precious crypto from going to zero in some like massive capitulation event and closing it down so no one can buy, obviously people say stock market has essentially, circuit breakers in place, but crypto doesn't have that and it's more volatile. Crypto 100% has that, because all they do is they just say, oh, our exchange is so busy, we're going to close it down, we're going to stop all buying and selling, and then they allow people to get out of their positions, or they step in and buy, or they stop the momentum to the downside, and then once everything has cooled down a little bit, they'll open back up these exchanges again. There's no excuses for billion-dollar companies to be failing and shutting down, like Coinbase, for instance, in the middle of a sell-off. If your company is worth billions and billions of dollars and now publicly traded, there's no excuse that you can't handle the volume. There's no excuse that you can't have customer service if someone is having issues. There is absolutely no excuse for the trash bag infrastructure that is Coinbase and that is crypto space. So we bounced basically off of the lower end right here, and we're able to find support on the Ethereum Bitcoin ratio back above the heart line of the channel, and so far looks good. Obviously rebounded much stronger than Bitcoin did,